This story begins with something simple: a plate of food, meals served to guards working long, exhausting shifts across Uganda. For years, no one questioned those meals. They were routine, part of daily operations, part of client requirements, until the day they became the center of a tax battle worth nearly 1.8 billion shillings. This is the case of G4S Secure Solutions Uganda versus the Uganda Revenue Authority. Between 2018 and 2022, G4S deployed thousands of guards across different client sites. Some of those clients insisted that guards be fed while on duty. Clients paid for the meals. Suppliers delivered them. And G4S simply managed the process. But when URA carried out a PAYE audit in 2023, they saw the situation differently. URA concluded that the meals were not just operational logistics. They were employment benefits. The Income Tax Act, under Section 19, defines employment income to include the value of any benefit granted to an employee. It also explains that a benefit is taxable even when provided through a third party under an arrangement with the employer. To URA, the meals fit squarely within that definition. Guards received them because they were employees. They did not receive them as private citizens. G4S disagreed. They argued that the meals were not company benefits. They were client requirements. Clients funded them. Suppliers delivered them. And G4S was nothing more than a conduit. G4S also pointed to the meal exemption under Section 19, subsection 2, paragraph E. This exemption removes certain meals from taxation, but only if they meet strict conditions. The meals must be provided in premises operated by the employer. They must be solely for the benefit of employees, and they must be available to all full-time employees on equal terms. But this became the turning point. Not all guards received meals. Only guards deployed at certain client sites did. Guards at other locations received nothing. Access to meals depended entirely on deployment. This broke the requirement of equal terms. And once that condition failed, the exemption failed with it. The tribunal noted that Section 19, subsection 6, makes benefits taxable when they arise from employment, even if provided through a third party. Because the meals depended on work assignments, they were linked directly to employment. URA argued that since G4S did not withhold PAYE on these benefits, Section 142 made the company personally liable for the tax that should have been withheld. After reviewing the invoices, deployment lists, and testimony from both sides, the tribunal reached a clear decision. The meals were employment benefits. They were not exempt. They were not available equally to all full-time employees, and they were provided under an arrangement coordinated by G4S. The tribunal ruled in favor of URA. G4S was held liable for the PAYE. The company was also required to submit accurate employee lists and cooperate in the recomputation of the tax owed. The lesson from this case is simple but uncomfortable. The Income Tax Act does exempt meals. That part is not in dispute. But in this case, that exemption vanished. Not because meals stopped being meals, but because of how and where employees were deployed. In tax law, it does not matter who pays for a benefit. It does not even matter who demanded it. What matters is whether every box in the law is ticked perfectly. Miss one box, and the exemption collapses. Here, a meal funded by clients, demanded by clients, and given only so guards could stay on duty, was treated the same way as a cash allowance. And that raises a hard question. Is this really what the meal exemption was meant for? If operational realities in security, oil, and construction automatically defeat exemptions written into the law, then are those exemptions real at all? My view, and this is my opinion, is that the tribunal followed the letter of the law, but the result feels disconnected from how business actually works. This was not a case about abuse or tax evasion. It was a case about structure, and the warning is clear. If a benefit depends on deployment, location, or client demand, the exemption may exist on paper, but disappear in practice. So ask yourself this: should a plate of food, meant to keep someone on duty, ever attract the same tax treatment as extra pay? Or has the law turned survival into income? Tell me what you think.